excited for this podcast. This is my good friend Theo. He was the other intern at Ventum where we worked this summer. He's had a very interesting background and has a lot of great perspectives. So I'm excited to have this conversation with you. And thank you for joining us. I really appreciate it.
I'm glad you feel that way about my perspectives. Not everyone does.
Well, before we really get into the finance talks, just how have you been? What have you been up to since finishing your internship? And
Yeah, I've had a packed week since my last Tuesday on the job. I've probably driven 1,200 kilometers, to be honest. And if you saw the state of my car, you'd believe it. I drove out to Penticton with a couple friends, floated down the canal there, ripped around on jet skis, and then straight back, and then straight up to Campbell River, then Port Hardy for some fishing.
So how long were you fishing for?
We went out twice. We were up there for 3 days with kind of a layover in between.
Were you successful?
Oh yeah. Well, maybe more the first day than the second, but I brought up a nice halibut, actually, pretty close to the coast. If you know anything about fishing, that's a nice fish and a tasty fish.
Oh, that's awesome. I've never actually gone fishing, but I would imagine that catching something is the best feeling in the world.
Yeah, working in finance, 100%, you're going to go out and do some fishing. I really couldn't tell you why, but everybody there loves it. They'll tell you all about things they've caught in the past on company trips or with their clients. And funny enough, for I guess the audience that wouldn't know, my dad is a retail investment advisor, and we were up with his clients. A big part of that is just meeting clients, and so a lot of vacations are often like that. It's part of the job.
So I haven't been fishing yet, but I'm on to the golf stuff, so I'd take a client out for golf or something. But
that's a good one. That's an area of improvement for me for sure.
Yeah, I got tennis. That's hopefully can pick that back up. I haven't played in a bit, but will be my finance game.
Nice.
So now also just like a little bit of introduction to what you're doing in finance, where you see yourself going, what also got you first introduced to finance, and what sparked your interest.
Right. So that's I guess I'll give you the whole history. My interest in finance started when I was probably like 8, because my father's in the business, and I knew very little about what he did, but I admired my father, and I wanted to follow in his footsteps. So like I mentioned, he is a retail IA at Ventum, formerly PI. I think when he joined it was Pacific International, and so it's been through a few name changes, but yeah, it kind of grew from there. And to be honest, for a lot of my life, I didn't really fully understand his business. I just I got kind of the little tidbits and the very, I guess, philosophical takes he had, but I didn't really understand the meat and potatoes of what he did other than stocks and investing for clients. And so it grew from there. I decided, as I learned more about it on my own, I decided that it was kind of what I wanted to do. So recently I have been exploring other angles besides the retail investment side.
And so what's that been like?
Well, it was phenomenal. Coming to the institutional client side, I really enjoyed it. Honestly, I can see myself in the business, but I am also glad that I do intend to go into retail, and that's just, I guess, for personal reasons. But yeah, it's a very, very appealing industry.
So what was so exciting about it? Like, what would a day look like for you? You walk in the office and what? Go from there?
Well, of course, I was an intern. Like, the nature of the work is never exciting for us, as anybody that's had an internship would know. But what was exciting was the people, the things they do, and I mean, their stories. I mean, for one, it was very, very cool for me because I was kind of given the impression that, the idea, the concept of the trading floor and full-time traders were not really around like they used to be, which is true. Trading floors are, probably a tenth the size they were in the 80s, and so growing up on movies like
Wolf of Wall Street.
Yep, Wolf of Wall Street, exactly.
The infamous one, yeah.
That kind of thing, like sales, really like sales focused or trading floors. it was cool to go to a place and honestly meet a guy that had been around since that time as a trader and is still working as a trader and is still very successful. They had physical trade tickets, which I thought was super cool. I never thought I'd see a physical trade ticket, and I'm glad, because you know what, that's something I'll be able to tell my kids. I got to work with those. I got to fill one out too. I got to fill out a few physical trade tickets actually.
So what do you think has changed so much? Is it just because people are working from home now? Or just...
No, it's been in the last, honestly, 20, 25 years, and it'll continue this way until it's a tenth the size of it is now, and that's just because of technological advancement, right? With modern blotter systems, which are effectively just, for anyone that wouldn't know, just basically books where you keep track of inventories of shares. It really reduces the need for a large headcount on a trading desk. So
yeah. And also for these, I would imagine that on the specific days where some crazy news comes out and changes the industry, where it's just, is it mayhem and there's everyone figuring out what to do, or is it still more individualized, pretty calm, and it's just everyone knows like they have a job to get to?
You know what, it can be both, and that's a really good question because I've seen both. So I don't know if you heard about the Victoria Gold mine collapse in the Yukon.
I have, but if you could give a little bit more light.
I'm sure our viewers have no idea, but yeah, a small mining company producing gold in the Yukon, and their mine just collapsed, and it was their single asset. I'm not sure if they had a 100% stake in the mine or if it was more like a royalties kind of thing, but either way, it was basically their entire asset. So their stock, obviously, it halted, and when it opened again, it opened at zero, which everybody knew was going to happen. They got obliterated, and it was pretty calm. It was just, oh wow, Victoria Gold, and I have no doubt some of the people there had holdings. It wasn't a big name of ours, but it was a known name in the gold space, especially for people at Ventum. And yeah, it was just like, oh wow, like look at this, and people are following the news feeds and chatting about it, but it wasn't panic.
Yeah, it seems pretty calm relative. Okay.
Yeah, I don't totally know the extent of anybody's stake in that company, but I'm certain that I had at least seen it pop up in some trades, and so probably some clients did have stake.
And then have you seen the flip side where it's mayhem in there?
So I even myself bought into some news, I'm sure you know, with NGEX.
Okay.
Yeah, so the NGEX requires a lot of context, but effectively some news came out about a similar junior in the area that was getting taken out in a joint bid with Lundin Mining and Philo. And that basically left them as, in 6 months, they're going to be the only junior in that district, which is in Argentina, and is known to have incredibly high grades of copper. It basically, in the investment space, when something is the only way to invest in something, it has value even if there's not as much intrinsic value as there might be if there were competitors or comparables even. And so it also, theoretically increases the likelihood that this NGEX would be taken out, which is usually at a higher price, is always at a higher price.
That's pretty cool. I think something that came up into my mind is that obviously if you work in like smaller firms in Vancouver as opposed to like bigger ones in Toronto, do you focus more with those mining companies?
100%. Vancouver is the small cap mining capital of the world, the junior mining company capital of the world. And say what you will about mining, it's been kind of especially exploration, it's been a spotty industry in the past. It could be argued that now, with that history in mind, it's and it's frankly often poor sentiment, that it's actually a little bit of a value opportunity. There could be discounts to companies that are kind of walking the straight and narrow and doing the right things, and such as this NGEX or another name we had come across our desk. I'm going a little off topic, but
we can
my-
go
my
wherever.
industry-
But what exactly does that mean when you say it comes across your desk? Does it like someone just send you an email or like they're looking to this company?
that
Or-
could mean a promoter calls. Promoters don't call me because I can't give them anything, but
Yeah.
comes in for a desk presentation. When I say that, is kind of what I mean. So all that means is a company and their management is coming in, letting us, mostly salespeople and bankers, know about who they are, what they do, some of their financials, just giving a presentation. And so sometimes they will be outright that they are trying to secure some kind of deal. Often they just want the marketing type exposure to some of the institutional clients. Sometimes they will establish deals for that to be marketed. And often the same thing occurs in retail, where retail brokers with individual clients will come and look at companies that they might be interested in, because getting to know the management behind an issuer is often critical.
Oh, that's interesting. Also, so you mentioned sort of like if you go in Vancouver, you're pretty much metals and mining throughout. But
Yes.
I know like this is more for investment banking, where people generally do like 2 years or 4 years investment banking, jump out private equity. 2 years analyst to associate, jump out venture capital. Is there that sort of jump laterally, or do generally people in sales and trading, institutional or retail, just stay in that route for like the majority of their career?
As far as mining or sales?
As far as in Canada, like if you're mainly in metals and mining, do you just stay at the same bank because it's all kind of investing in metals and mining?
Right.
Does that have a difference in different countries when there's like more industries you're investing into, like switch to other banks? Or anyways, you see where I'm going.
Yeah, that's a good question. So metals and mining, I would say generally no, because when you tune yourself to understand a certain industry, it's kind of, you kind of have to throw some things out to change and adapt. And honestly, I think Vancouver maybe gets a bit of a bad rep for that, just being so metals and mining focused. But frankly, there's a reason it's the biggest industry here. Even if sentiment in that industry has been poor in the past.
So sorry, you're saying so generally people will just stay at like stay in sales and trading, where they jump to like a hedge fund, for example? Or is that two completely different things?
A little bit. It's entirely possible, but generally with a hedge fund, it's more, I would imagine, more portfolio management is the well-paying side of that. And so in sales and trading, honestly, portfolio management is almost, I'd say, not a part of that.
Okay.
Yeah, generally. Some people in sales and trading will manage small retail books. That's not uncommon, but it's also not the primary focus, and frankly, it's not how they make their money.
So then do people then jump in like within the same bank between capital markets, institutional, and retail? Is that a common switch, or is it you mainly stay like in retail investing at the beginning and that's like where you are throughout your career? Or do you go like retail for a bit, switch to capital markets?
That's another really good question. So that can go both ways. I wouldn't say it's super common, because again, you kind of tune yourself into one thing, and that becomes your specialty. So for, I would say, all the people on my desk, they did manage retail books, but it was generally for friends, for family, for people that needed that. They're not going out and finding, making those connections to bring in new people into their circle to manage their money, because it's, again, just not profitable for them compared to the other side. As far as crossover, I think maybe I'll tell you two kind of tales of how this might work. So yeah, like I think going from institutional to retail is rare. I will say that, but also
just for
possible.
the people watching that don't exactly know, if you explain a little bit the difference.
Yeah,
there.
we should probably get into that. So institutional and retail, the difference obviously is it falls into lots of aspects in the business, but the primary difference is the client. So in retail, you're investing, you're managing an individual's money, say an individual or a household in retail. In institutional, you're managing a company, a fund, maybe a trust, say a hedge fund. And so obviously the needs of those two groups are very, very different. With one thing that could be is like take a large fund, any you can think of. They're usually not dealing with one firm. They're often talking to people in sales and trading at a bunch of different firms, and so the repeat business is not as strict. I don't know if strict's the right word, but with a retail advisor, you're relying on repeat business with those connections, whereas institutional, that's maybe not quite true. Though obviously if you serve them well, they will continue coming back, but it would be very easy for them to step away. Whereas retail, if they decide they don't want to deal with you, they pull their money, and you will, without a doubt, I don't want to say without a doubt, but you probably will not see that client again. If they leave.
We have to pull it out for a reason.
Yeah.
Which also brings to another thing is, how much of your day would you say is looking at politics and realizing like how intertwined is especially now metals and mining with like the political sentiment, and is that like a big part of the job, just paying attention to current events, because I'm sure that'll have very big impacts on investment decisions.
Surprisingly it wasn't, and that might just be a factor of I wasn't super interested in the kinds of politics. I'll give an example of this NGEX in Argentina. There's lots of other mining projects in Argentina. If I would assume the viewer base is not super familiar with this new president of theirs, Milei, but he is an ultra-libertarian type. He's very pro-foreign business, where Argentina formerly was not a good place for foreign companies to do business. As with much of South America, they ran the risk of effectively being extorted by the government. And so with this change, with this new leader, there's a lot less geopolitical risk on investments in that area, and so sentiment has way increased. But that's kind of the main example I can think of. Obviously, it plays a huge role. I just didn't really personally get into that, and I typically am somebody that's interested in that. So
that's interesting, and also, so this is kind of a selfish question, but I'm really interested to see. I feel like you have a good understanding of the way everything is interconnected. Last Friday, so if you want a timestamp, what was that? 2 Fridays ago. Was that the July, at the end of July or something? The stock market fell down for a day, and then I come back the next week and it's looking like it's starting to come back. So I'm wondering, what's your idea of what happened that day? What's happening now? What's overcorrection? Things like that.
Right. So I think it's approaching the highs. I think today was a good day. It's had we're tracking specifically the American markets here. So if you want to search that up, you can punch SPY into whatever your stock tracking service is, or NASDAQ, QQQ. Those are the relevant ETF products. But effectively, they've reached all-time highs. I'll give a little more context here. They've reached all-time highs. Valuation is at an all-time high, which valuation, a simple way to put that would be PE ratio, though that's not the only way to value a company. And it's been on the back of high interest rates, in many people's opinions, a looming recession, and AI hype. And I don't say that lightly, AI hype. I don't believe that you hear some use that term to discount it. I don't discount AI at all, but it's frankly confused a lot of people, because there was a lot of fiscal stimulus during COVID, resulted in inflation. I don't need to tell the story. High interest rates, it's been about a year of like very, very high, the highest in years in the US. And only now are banks starting to cut. So, frankly, I believe that the recent downturn was just due to bad economic data. And a lot of people will call that a bear trap, meaning it's when everybody's going to sell and say, oh, it's happening, we're going to have a 30% correction. I don't believe it was a bear trap. I think there will be a 30% correction. I don't think it's going to be like COVID, because there's no reason for it to be, or a flash crash. But, and again, this is purely opinion, and I am fairly unexperienced, so take my opinion with a grain of salt, but it's an opinion shared with other people.
I saw like the JP Morgan guy came out saying he thinks there's going to be 50%
Yeah,
cuts.
exactly. Two 50 bip cuts in 250 basis point cuts in September is now, I believe, what's being priced in, meaning it's what the stock market is expecting. There's even been talk. It's not just been JPM. I think it's been a few of the major U.S. banks.
Yeah.
Citi, I think, was the first people to do it, but yeah, it's starting to be priced in. There's even been talk of an emergency Fed meeting in August with a 25 basis point cut. I don't agree with that.
So what does that mean for like these investing decisions? When you hear there's going to be a big cut, does
Right.
that mean should that trigger a seller? Again, this is asking another selfish question I want to know for my own investments.
Yep.
Does that tell you that's good? Does it tell you that's bad? What is that?
Well, so rate cuts are an indication that the economy is slowing down, because you want it to be cheaper and easier to raise capital in an economy that's slowing, so that you ideally don't enter a recession. The U.S. is going to enter a recession, in my opinion. I believe there was too much fiscal stimulus, and again, I'm not the person to listen to, but I've listened to some very intelligent people explain it.
So there's definitely been surprise that it's looking. There's a chance there's not. So
I think what we're seeing now is, well, conspiracy theorists might tell you that it's
because they're trying to say like it's a slow, like looking at the yield curves, things we don't need to get into now.
Yeah.
But anyways, so go on with what you were saying.
Well, no, conspiracy theorists will tell you it's people pushing the market so that big funds can make an exit. I couldn't speak on that, but if you look at a chart of how these things often happen, it will happen like this. We're not going to see a big correction over a few months. It's probably going to take 12 to 18 months. It's going to take continually worsening economic data, a worsening consumer, because at the end of the day, no matter what happens, if your consumer is weakening, you really can't, like if you have a weak consumer, you're going to have a recession. Companies won't make money with a weak consumer.
Yeah. Also, like so we'll elaborate a little bit more for yield curves. If you stop me if I'm incorrect here, but from my understanding, is that there's two different yield curves. There's a 10-year yield curve and a 2-year yield curve, and other yield curves as well.
Points on the points.
And then they look at to see if what pretty much if people have more confidence in the long term or the short term.
Yes. Yeah.
And then so if it's like correcting now, because right now people have more confidence in the short term than the long term?
Yes, exactly. So that what that aims to portray is, do people think interest rates are going to be higher now than they are at X point in the future? And so when a yield curve is inverted, what it means is effectively people believe that interest rates are higher now than they're going to be in certain points further out in the future. And so what you kind of have is a shape where it's made up of the rates and the duration of X government bond that you might buy. And effectively, if there's a lower rate further on in the yield curve, what it says is you're going to get a lower yield, a lower annual yield, because we believe interest rates are going to come down. And so, of course, the price of the bond, the price of the bond, the market price of the bond is going to go up.
So Like, so definitely
Yeah.
a lot of things you need to be paying attention to,
And-
and
Yeah.
when you're going to sales and trading. And
Well, I don't know how much the guys on my desk pay
They don't
attention to
post that?
the yield curve, no. But in retail and analysis, yeah, it would definitely be something relevant to investment decisions, especially if you maintain a large bond portfolio. That's been a very poor business up until the recent hike in interest rates, because not too long ago, before COVID, they were 0.25%, I believe, in the U.S. Like, anyone that was buying bonds then has been laid waste to now. If you guys want to get into options, I've been exploring that a little bit, and I've had the good fortune of speaking to somebody on my desk that is also getting into it. Very, very smart guy that's been in sales and trading for a long time. Fairly young too, but he's been in it since he got out of university, and he's been himself learning about options and kind of showing me some of his trades. And
so, if you could explain a little bit of how an option work and
totally. So I'll give I guess the basic explanation. Options are derivatives, and derivatives are, I guess the way I might explain this is, when you own a stock, you own shares. You own shares of a company. You own stake in that company. When you own bonds, you own a share of that company's debt. When you own options, you own nothing. You own a contract that stipulates, as an example, it can mean many things. When you own a derivative, as an example, there's all kinds, and it's interesting to search some of them up, but don't spend too much time on it, especially if you're just getting into investing. It's not super relevant, and you could honestly go your whole career without ever caring about derivatives, and you'd be just fine. Maybe even better off, but effectively options come in two forms: calls and puts. And what they are is contracts stipulating, either in the case of a call, a certain price you could purchase a stock for. I even get confused myself. I want to make sure I'm not saying this wrong, but effectively a call is a bet that a stock is going to go up. And so with options, since you're not paying for the stock itself, you're paying for a contract, you get an incredible amount of leverage because these contracts are cheap. At the same time, if a contract doesn't meet certain conditions, say if the stock comes down, that contract is worthless. And they do have a certain period until they expire. So the other example is a put, which gives you the right to sell a stock at a certain price. And so a put is a bet that the stock is going to go down. And again, if you can say something is going to do something in a certain period of time and you can narrow it down, the best way to make money is options.
seems like also that these were created to hedge against their
Yes.
bets, but they've been turned into these
They have been turned
speculative.
into so they're often used for speculation. Josh is totally right. Their true purpose is hedging. Most of what options are used for is hedging, because effectively you can pay a small amount of money almost as insurance against the position. And so the flip to that, and in my opinion, the true way to make money with options in the long term is selling these contracts on your own positions as an income generator. But of course, the risk is that, say with a covered call, which means selling calls on a position you own, you run the risk of having to sell your whole position at below market, so you can lose a lot of money. And on the flip side, all you get from that is the premium, or the price you pay per contract, that people pay per contract.
So, unless you have a follow-up
No,
question
go
about
ahead.
that. Now, this will be more helpful for the viewers, but how did you learn all of this? What do you recommend to go to learn all of this? Is there specific courses that you think you should take? Clubs you think you should join, depending on the school, and things like what can you do to best prepare yourself for these roles?
The best thing you can do is talk to professionals. I know it's hard, right? Like, I wish I could walk out my front door and speak to a professional options trader, but yeah, like you will learn incredible stuff just having the opportunity to get FaceTime with professionals. And the truth is a lot of really good people, they just won't want to talk to you because when you're young, you often don't have a lot to offer. But if you can get the ear of an industry professional and talk to them, you can learn and frankly intrigue them with good questions. You can learn a lot of really good things. And so that's, I guess, what I've tried to do is just shut up and ask questions. Ask questions and then shut up, and then ask more questions.
They also, people like to feel like they know what's going on. So ask them, what do you think of this? Like, it's a great way to get them just talking to you.
Totally. And frankly, some really intelligent people will be willing to chat with you for hours because they're fascinated by what they do. Some you'll have a harder time getting things out of. The MD and the head of the capital markets group, my boss, he's a busy man, and frankly, he didn't have a lot of time to talk. I did get the chance to sit down with him at the end of my internship, and it was good. It was really good to talk to him. But so yeah, some people, some successful people, they're just they honestly don't have the time to talk, and so you gotta get a little lucky with who you meet.
Well, I think that's a great question to pivot on.
Yeah.
Towards networking.
Oh yeah.
So, how important was networking to you to getting to where you are, and how would someone in first, second year university who doesn't really know what networking is get into it?
Yeah. So I mean, networking. I'll be honest. I don't want to say easy for me, but it was accessible for me, and it's because I have connections through my dad. So I was introduced to good people to talk to throughout, and of course he himself. He loved talking about his business. I got to learn a lot about his philosophy. But you have to go beyond that. You have to make your own connections. Otherwise, you don't offer a lot of value to anybody. So, yeah, and that's another thing is I don't want anybody to, I guess, be turned away from finance because of the nepotism, because it is there. But frankly, if you're entrepreneurial and good at communicating, good at networking, you can do so much better than a lot of people. And frankly, it's an advantage to set yourself apart, because a lot of people in finance honestly are there because of connections they were born into, and that's just not conducive to good outcomes, to good personal success. And so you can really set yourself apart from some people like that. So, but to get back to your question, yeah, networking is critical. So I go to UBC Sauder. I'm studying commerce there, and the reason I wanted to go there is because they do a great job of encouraging you to network, of hosting events to get you in front of professionals, because it's all the same. At the end of the day, it's the same textbooks, right? And nobody, I think, well, most people that have had success in finance, they didn't just learn everything in school, right?
And out to the best of your knowledge, when you are going to hopefully network for all these companies, is there a difference in the life at the different levels of companies? So is the top of the top, you go to the best investment firm, is the life within there different to each level down to a boutique, to see which type of life I guess you first would want to have, and then can decide who to talk to then? So I feel like that is kind of important for me, especially when I'm going to network, is I want to pick companies where I'm interested in working, the type of life that they have, the environment, and then we'll network there. So, which brings me back to my question is the life different at the different levels of investment banks, or is all sales and trading kind of the same? You start when the stock market ends or opens, go home when the stock market closes?
Ideally. I haven't talked to a lot of professionals specifically on the institutional side of sales and trading, but I can answer your question in, I guess, the general sense of finance. And yeah, the answer is, of course, the lifestyle is so different between, and just frankly, the people that are attracted. So again, I can't speak to investment banking, but I know the goal is you want to go to the top, the most prestigious bank you can acquire. Is that accurate? More or less?
Yeah. Fair statement.
On the retail side, and I'm sure the institutional side too, you can make incredible money anywhere if things work out for you. So, and honestly, I would say on the retail side, a lot of the really good advisors probably aren't at the big five banks in Canada here. Lots of them are at independents, and frankly, lots of them are independent themselves, because that's when you can do that, that's when you really start making money. When you can separate from your firm. But I guess to get back to your point again.
So I guess,
Yeah.
I know another way to answer it is you kind of laugh when I said you go home when the stock market ends. So what would the hours actually look like?
In sales and trading, yeah, pretty much when the stock market closes. But of course, occasionally there's days where, as an example, we sent one of our NCIB clients incorrect information, and so NCIB is normal course issuer bid, which effectively means a company's buying back its stock in the public market, and they're using our traders to do so. And so they have to send that information to TMX Group to get those shares canceled. And TMX Group runs the exchanges, the TSX Venture. And the information we sent them was not correct. TMX got back to them, they got back to us, and that's a pretty big deal, because it certainly doesn't make us look good. It was an honest mistake, honestly, I think more to do with software than anything else. But yeah, so me and one of the other employees there spent a few hours. I think we were probably in the office until 4:30, which, you know, that's not. I know I'm speaking to some investment bankers that are, what are you talking about? Anything less than a 16-hour day is. But we had to spend a few hours, a couple days in a row, just figuring that issue out.
So then, like, generally though, the difference between companies going up or down, it's how intense it is while you're there, or is it still, you'd imagine, like, just the different names, different little culture?
Well, at the end of the day in finance, you get out what you put in. So some people will leave every day at close, but if you want to have success, you put in a few more hours, right? You do
And
it
that's
for
just
yourself.
like researching the things what you're going to do the next day.
Yeah,
Or like, what exactly
or talking
can you
to
do?
clients, or there's any number of things. Yeah, talking to your clientele from the point of retail. Yeah, maybe going out and meeting them. There's lots of, like, especially in retail, when you start to get a decently sized book, a big part of that is managing the relationship with your clients, and so of course you want to spend time meeting with them, and so you will be kind of working strange hours. Like I said at the very beginning, I was out fishing and my old man was meeting with clients. Right, we were fishing with them. Actually, they took us out, which was very, very nice. And always really interesting conversations. You meet a lot of really cool people that way, and that's one of the big appeals of retail to me, is just meeting some fascinating people. A lot of them business owners.
Let's hear more about how you got to school, kind of what your experiences were like at school, and how that kind of propelled you into, like, the finance situation you're in now.
100%. So, going back to the end of high school, I had pretty poor grades. Not terrible grades, but pretty poor grades. I knew I was not going to make it into UBC Commerce Program first year, without a doubt. The admission standards were crazy high, and I had a decision between going to U of A, and they have a great business school, without a doubt, but I never intend to work in Alberta, and so a lot of the connections I make there likely would not do a lot for me, just because they're not local. So I set my mind I wanted to go to UBC, Sauder specifically, study commerce, because I wanted to make those local good connections. And frankly, there's a lot of really interesting people at that school. And so I went to a small college, Corpus Christi, where effectively they had a lot of the same UBC professors teaching, And so what I did was I went there, got my grades up, and transferred into second year, which was surprisingly not too hard. I think a big thing that helped me on my application was my extracurriculars, because that apparently is, I think when I was going, it's weighted as like 30% of your application, maybe more.
Yeah, I think definitely depend on the school and in whatever field you're going for, but I believe solder for commerce specifically, they really like extracurriculars.
Yeah, and that's something I'd really like to touch on later, because it's honestly just a big part of my personality. But yeah, so I got into second year, all my credits transferred, so that worked out really well. And so I'm in fourth year now. Probably going to take another year to graduate, or an extra 6 months. And frankly, that's just because I'm not incredibly academically inclined. Five courses a semester, especially with some of them being quantitative heavy courses, it's a little difficult. I struggle to really focus in, and frankly, when I did do that, I found that I wouldn't take away as much as I might where I had the ability to focus in on, say, 4, which is what I'm doing. And so anyway, that's not incredibly relevant, but it is a good message to those like me that are not incredibly academically inclined, is you can do it. You got to work hard, of course, especially in that first year when you want to transfer. You got to get those grades up. But from there on, just learn and make connections. And so anyway, my first, let's see, my first summer, in between when I transferred, I worked as a lifeguard part-time and then full-time as a joiner, which effectively like a carpenter or a woodworker. Good job, I really liked it, but a means to an end, just making money. Lifeguarding, another good job, and that ties into my extracurriculars, which I'd like to get into maybe a little later. But after that, I did an internship, National Bank Financial Wealth Management, which is effectively their retail division. And it was good. I will say outright, getting started in retail, and everybody will tell you this, it's not as fun or as interesting, not nearly as the institutional side, whether it's investment banking, sales and trading, research, whatever. But it was good. I got to meet some good people, some nice people. I got to work on a team of very solid IAs, investment advisors. And frankly, they did put a good effort into talking to me, explaining things to me, helping me develop a little bit. And maybe I should explain a little further. I was an internship for the branch here in Vancouver. I was the only intern at that branch. They had, I think, 20 interns, and National Bank is a French bank, and so most of the interns were in Montreal. And so I did a few different things.
And what intrigued you to get a job there in private wealth at National Bank? Once you got there, what was attractive to you about that field? Also, what wasn't, and why do you now decide to pursue retail investments after working at National Bank?
Well, that is a really good story that I will tell you after I finish talking about National Bank. So I will. No worries. But yeah, it kind of ties in. So the reason I did retail is it was what's obvious. I knew at that point I wanted to do retail, and that's because of my family in the business. My dad, it appealed to me the most, and frankly, yeah, where I didn't completely understand the other sides of institutional either, beyond investment banking, because that's what everybody talks about at school is investment banking. And so I thought, okay, well, I don't really have an interest in investment banking. I don't know what else there is in institutional. I'm not really interested. Let's do retail. And so that's what I did. It was a great internship. But again, being so disconnected from the other interns was not great. But it did give me the opportunity to really, honestly, just wander around the branch. I don't mean that I guess maybe in a little bit of a literal sense, but I got to work with, I think I probably worked with almost every IA team on my floor. I worked with the financial planning department. I don't think I ever worked with insurance. But yeah, and so eventually and operations. I worked with operations, which was interesting as well. I met a lot of really nice people in operations, but probably not something I'd want to do personally. And so I got that. I ended up mostly working with a wealth management team of 3 advisors and an associate. And I stuck with them. I really liked them. And then they hired me back on part-time for the school year, as technically the job title was marketing agent, though most of what I was doing did not have to do with marketing. I was actually doing a lot of cold calling.
Okay.
Which was, great experience. How many 20-year-olds can tell you they've done cold calling?
Yeah, I can tell you, I'm one of those 20-year-olds, and it blows.
You
oh
did,
my god,
right? You did do it.
Yeah, I did it twice. I did it for a dairy farm. I was cold calling, and wow, you get so comfortable with rejection. Like,
yeah,
life.
It was a great experience.
And
I got so sick of it.
And that's also what people are behind the phone. Another thing is I was doing it when I was running like a manual labor company, and we went door to door, and so it was getting the rejections to your face, and that's a whole nother thing where
dude, some of our generation can't order pizza over the phone, so.
No, it's ridiculous. Like, some people will be like, no, you do it, or like,
someone. So that was a great experience, because you think you can hurt my feelings. I was a cold caller. You should hear some of these promoters on the phone, like, wow, they're slick, because I have spoken to a few. But anyway, yeah, I did that. I also did a lot of research-related projects for my advisor. Obviously, a lot of admin. And yeah, and then in December, we kind of talked, and it's like, I want to focus more on school. And honestly, it's quiet in that season. Nobody's picking up the phone to a cold caller around Christmas, so we kind of parted ways, but they were awesome. Howard Wealth Management Group at National Bank Financial, they were awesome, and they really put an effort into developing me, which was great. And they're smart guys there, and they're very ambitious.
So you weren't going to school then for this semester?
I was, yeah.
Oh,
I was doing school and work. But I just found it was a bit too much. I was doing 4 courses at that time, not 5, and then working I think 2 or 3 days a week, and of course. Can't work weekends in that line of work. You have to work weekdays, and so just a bit of conflict. But it was a phenomenal experience as well. It's just retail's not quite as fun and exciting as institutional, but solid experience. So,
sorry, you may have answered this already, but so what was your exact role at National Bank?
Wealth management intern and then marketing agent, but really that was the technical title, because it's a bank, and so that tied into the pay grade, because I'm not licensed. So effectively what I was an unlicensed associate.
I just asked because, so what drew you to that role in the first place? And then, what then... Yeah. And you saw everything else, which I guess was able
what
to
drew
lead
me
to retail.
into retail specifically? Or?
But what first drew you to wealth management, just so you can see what that story of your life is like?
Yeah.
And then what drew you to then leave wealth management? Or I guess
I wouldn't say I left.
Or is retail
circumstantial?
Oh, okay.
But yeah, no, that was a good experience. So my dad is what drew me to wealth management.
Sorry, also I may be confused. Is retail investment, is that still wealth management?
Yeah, so retail wealth management.
Sorry, I thought it was something else. Okay.
A lot of terms for the same thing.
Yeah.
And that's a good point, is that can get really confusing. And I had that experience in second year where I went to these networking events, and I'd ask people about their jobs, and I was probably 18 at the time, and they talk about, this like retail this, something institutional this, and I'm like, oh man, what are you talking about? Like I have no idea what you do. And it was a bit of like, okay, I need to figure this out kind of thing for me, because so that's another thing, is if you want to go coffee chat, I mean, for sure go for it, but it helps a lot to learn the terms, learn the jargon, learn like the industry slang. And I wish I could tell you a quick way to do that other than just having kind of fumbled conversations with people, but that was how I learned it.
Yeah, just like this. That is that is very good to know now going forward.
For someone who's starting networking, for someone who has no idea, that like they hear the term and they're like, oh, networking, coffee chats, like what advice could you give to them?
Oh man, just do it. I know it's not pleasant, but you just got to do it. Sorry, you got to go talk to people. Social events are great. Following up is good.
Also, I'll say, in the follow-up, when you ask them, like, is there, we follow up with, even at the end of the call, like, this was great, is there anyone else you recommend that I talk to?
Yeah.
Because, or in the follow-up email, is there anyone else you recommend I talk to? So that if you get that one person that wants to help you, hopefully that dominoes into a bunch of other people. So it's, like, the follow-up email is definitely very important, that I feel like a lot of people don't think too much about. They think about the conversation and then kind of end the relationship there.
Totally. The follow-up, you're not just trying to express your thankfulness, you're kind of trying to lead it, hey, maybe if it was a great conversation and you think it could go somewhere, hey, maybe let's chat again sometime, or ask for more advice. But yeah, like networking, just kind of go for it. It can be like a little awkward, right? Especially if there are people, it's like dating, right? Especially if there are people you met at like a networking event, it's a little awkward to kind of reach out afterwards, or it can be for some. But yeah, totally just go for it.
Is that just all on LinkedIn? So reach out?
Yeah, LinkedIn. You mean specifically finding? Because I've done that. Finding people off LinkedIn. You can go to a firm's website as well. And in the case of retail, specific advisors is a great way to go. So you look at a list of retail advisors. They'll have often like little blurbs about themselves on the site or their own websites. And you can say, this might be somebody that I'd be interested in working with. And they love to help, especially if you can make a good impression, which is another thing that I think is not maybe talked about enough in networking, at least at school in my experience. Yeah, if you guys have any take on that too, like.
No, I definitely think that your take right there about looking up online, understanding the people before, and then seeing if you have resonate with them and want to reach out is a great thing to take away. I haven't found much luck with finding people's emails online, which is why I've had to go the LinkedIn route. And because generally I feel like, especially in investment banking, the only real biographies they have of people at the top of the top firms, which are not the people that you're reaching out to. It's more the lower level individuals. So, and they won't have their like email posted on the company website. So you'll find the people working there, which I'll a lot of times do is look at the firm on LinkedIn, filter to see the jobs, filter to see any connection I have, whether it's the high school I went to, soccer clubs I've played for, I'm Jewish, so the Jewish community, whatever it is, we'll filter to somewhere where I have some sort of connection, and then we'll reach out through LinkedIn. And then, but if I have the email, phone number, that is definitely been much more positive experience with getting replies back, because a lot of times people just ignore their LinkedIn emails and totally. Beyond that, even just their regular emails. But the LinkedIn is much less successful, but a lot more accessible.
Yeah, totally. So you can put out a higher volume, which is what's important. The issue with emails on a company website is often they will get filtered to junk, and a lot of these people, their companies will spam them. I'm sure you're familiar with just the company emails, like blowing up my inbox, and it's even worse for people higher up. They get so many emails, they're not responding to those. But I will say, they do post their direct phone numbers, and you can call them. You can do it.
All right. That's a new way.
Yeah, it takes some balls.
And then so when you're talking about going to social events as well at the beginning, is there like, I also just found this out for people at Western. It's PBSN. I forget exactly what it stands for, and I don't want to mess it up, but it's for individuals, and I think in all of Ontario trying to get into business. It's for like first, second years, that you can join the club, and then they'll set you up with mentors. So it's a great way to get connections and be invited to these social events. Is there anything like that in BC where you recommend to get to these social events where you could be talking to these professionals?
I'd struggle to name things in specific. In the case of UBC, they have these events running nonstop for every industry. Yeah, one thing that I really enjoyed that I went to was the case competition. Do you remember what that's called?
What?
The something investment banking case competition.
There's so many.
Yeah, there's a
Yeah,
lot.
I don't know, the big one that everybody's always talking about.
Oh.
I've never done it, but they brought professionals out. Anyways, there's at least in the case of UBC, there's mountains of these events, and honestly, most of them I've heard about through word of mouth, just from friends at the school that I've talked to, and yeah, just go talk to somebody, and if you do kind of hit it off, like if you genuinely hit it off, follow up later and ask them for coffee.
So if you don't go to UBC though, how would you recommend getting to these social events?
Well, I'd hope your school would host some, but I just can't speak to that. I don't know. Almost everything I've done has been through UBC or through jobs, through work. So, yeah. I wish I could give specific insight on that, but
No,
it's kind of harder.
It
to find
is
smaller
tough.
Circles.
It is tough, and it is. I just feel compelled to ask because a lot of times people say they're just talk to as many people as you can, but when you're not in as fortunate situations as us where we have the foot in the door, it's like I don't have the connections to talk to anyone. You can feel a little hopeless at sometimes because you're sending emails that aren't getting responded to, and you're not meeting anyone in person. So I just definitely the advice you have of looking up for people online, feeling at the connection, so you can also tailor your emails is a great way to go, path forward. Yeah, whatever it is, your school, sure they have some directory, can get involved there, clubs, there's always, for the people saying that or feeling that there's a tough way to connect to people in industry, there's always something, just got to get creative.
Yeah. So to add to that, I've met a lot of people with incredible connections that they met by chance, and so just honestly, generally being an outgoing, social, honest person will go a long ways.
I think actually speaking on the chance part, when I was just getting into networking, just getting into coffee chats and stuff, I'd ask people about how you got your internship, how you got your job offer and stuff, and a lot of people would say that I got lucky. And I was thinking to myself, no way everyone can get lucky. And then I finally ended up landing my job because I talked to the right person, been right place, right time, ended up going through the process, and I got lucky. And I kind of understand where it's coming from now. Can you speak to that kind of aspect and
Get lucky?
What?
Well, you make your own luck, right?
Yeah. No.
Yeah, so making your own luck is important.
Just always got to have I'll let you answer more, but you always have to have your eyes open.
Yeah.
Because a lot of times people won't be aware, I think, to the opportunities in front of them. They won't, the people that they're talking to may not be aware of the opportunities that they could offer. So I think that's just definitely a thing of making luck, because it's just a lot of luck is capitalizing on the opportunities that are around.
Totally, I could not have put it any better.
Thank you again, Theo, for coming in. That was
my pleasure.
Awesome. Yeah, I'm so happy with everything you shared, and I'm excited for you guys to continue your finance journeys. And yeah,
I hope I could provide something of help, but something that'll help you. But we'll see.
All right. Cheers.
Oh, thank you guys.